Bank of Ghana's Monetary Policy Committee continues with the easing cycle, cutting the monetary policy rate by 250 basis points to 15.5%. The governor of the Apex Bank, Johnson Asiama, notes that headline inflation is broadly expected to be within the medium-term target, barring potential spillover risk from upward adjustments in utility prices and commodity market volatility. Richmond Frimpong, the advisory board chair of FLF Africa, joins me now for more on Ghana's economic outlook. Thank you so much for your time, Richmond. And let me get your take on the MPC's decision and also the expected trajectory for monetary policy in the near term.
Right, Ken. I think it's perfectly in line with the policy posture. And so to begin the year with that tone, quite aggressive, but it's required so that it can keep the pricing stability mandate.
Yeah, aggressive but required, you say. But let's look at the medium-term inflation projection for you. You know, with inflation currently around that 5.4% band, do you think that real rates are now too restrictive for growth?
I think we are going to see that test. I mean, largely as we now turn the tide and the focus towards growth, post-stability. And the two risk exposures that can be outliers to disrupt these price stability measures and anchors will be the fuel and the energy side, and how the government's corrective measures is able to tame the frictions that come up and pushes the price outward. That is one. Two will be the commodity drivers. If they keep going the way they are going, upward, northward, especially for gold, then they will still be able to contain the supply side and be able to manage the price stability mandate. So outside of these two critical risk factors, I think we can still keep inflation at single digits before the year ends.
All right, interesting risk factors you mentioned there, but then let's look at some of the positives that we're seeing for the economy in Ghana. That rally in gold definitely one of that's going to support the efforts of the gold board and Ghana. But speak to what the rally we're seeing in gold and what that means for the reforms we're seeing from the gold board.
Well, so two things. In the immediate term, the effect of the commodity pricing on the gold side and its implication on the government reserves and asset diversification means very well for the monetary policy side. And as it is compounded, or as it meets up with the fiscal discipline that has so far been displayed under the funds program, it looks quite well. But the government should be careful. The fiscal side has done so well, largely also because the economy has been packed at the fund. And so there is very little room not to be disciplined. Number two, we cannot predict the upward trajectory of the gold pricing. And so the monetary side will have to be very careful in diversifying the assets that return and give them upward increased reserves that is able to keep the economy running on the same pace. And so I think the government should be extremely careful. And even if we have to exit the IMF program, they would still have to behave as if they are there. And then the monetary policy side will still have to keep its eye on what else they can do outside